Leanne, your thoughts on the session today?
James, it certainly was a positive session. I think there were a couple of drivers of our market today. Firstly, this morning we really did open up in positive territory, and of course that was off the back of some very positive leads we received from the US on Friday. We did see the S&P as well as the Dow reaching record all-time highs yet again. So for most of the morning our market was performing very strongly. Then of course we did receive through that Chinese manufacturing data, which was ahead of expectations and ahead of the previous read, and as a result our market really did jump up around 12 points to that 54.60 level. We saw the Aussie dollar jumping up, and of course we saw a lot of those iron ore stocks rallying. So as a result we saw that materials sector the best performer on our market for most of the day, and it did close up 1.4%. It was driven higher by Arium, which closed up 6.8%, and Atlas Iron, which closed up 6.2%, shortly followed by BC Iron as well as Fortescue, and really those were the stronger performance of our total market today as well. The staples area was very strong as well, up around 0.8%, as well as property and information technology, strong performance as well. Some fairly light volumes again, about $3.8 billion, but certainly a very positive day on the market.
The question, of course, is can it continue?
James, we certainly are seeing some very strong gains. I mean, last week we did see the biggest one-day gain on our market since the start of the year. We did close up for the week about 0.3%, although we do still look like we are lagging behind the US in terms of some of those gains that they are seeing over there. The Dow for the week was up 1%, the S&P 500 up 1.4%, and the Nasdaq up 1.3%. So we certainly do seem to be trading within this very tight range of between sort of 5,400 and 55.40. I do certainly think in the short term though we do need to be conscious about this confession season, and we do know that it is continuing, and we could expect to still receive some earnings downgrades and profit warnings from companies as we have done, particularly from the retailers. I do think there is a little bit of nervousness building about the upcoming reporting season, and of course that's a result of the budget, the weak iron ore prices that we're continuing to see, and of course these profit downgrades that we have been seeing particularly from the retailers. I do think compared to some other years it's been fairly quiet in terms of confessions, but we may start to see them coming towards the end of the year, and I do think there is probably a bit of a risk that there will be some disappointment in a lot of stocks, particularly around retailing, media, engineering, and potentially mining as well. But I do think for the market the most risk looks to be towards the financial year 15 earnings. We could see the mining earnings being lowered, but could potentially see some of those bank earnings being upgraded. So really our forecast for the market earnings is only a fall of about a few percent. So in this case we do think that our year-end target of about 58.50 could potentially still be achievable, but certainly in the short term I do think there might be a little bit of cautiousness ahead of the results season.
Stocks in the near term?
I certainly think in the near term we could potentially still see a bit of volatility, but certainly looking towards the end of the second half of this year we do remain fairly positive on that iron ore price picking up again. So we do certainly see some value in some of these iron ore stocks at current levels, mainly Fortescue as well as Rio. So yeah, certainly in the short term I think potentially could still see a bit of volatility, but coming into the end of the year expected to pick up.
What about a stock like Metcash? Obviously we had results out today. I mean, this is a stock that many people have had a question mark over simply by way of whether or not they've had an ability to compete with Coles and Woolies going forward. Your thoughts on Metcash?
James, Metcash was an interesting one today. They did come through with lower net profits for their full year, but we did in fact see the stock trading higher. It closed up close to 3%. I really think that was a result of a couple of reasons. Firstly, I think the market was expecting a poor result to come through, but in fact if we have a look at some of the numbers I think most of them were ahead of analyst expectations, and they certainly were ahead of our expectations. Their net profit after tax was down 11% in comparison to our forecast of 12%. Their earnings were down 11.7% in comparison to our forecast of 14%. And finally their cash flow was up 30% in comparison to our forecast of around 24%. So certainly in our mind it was ahead of our expectations, and I certainly think a reason why we did see the stock performing well today. But secondly, even though we are seeing them trading in very challenging market conditions at the moment, I do think that $480 million transformation...
I flagged it at the top of the show. Sorry, Leanne.
Transformation project is underway, and so I do think that was another positive, and we did see the stock performing well as a result today. I know that they are obviously in competition with some of the big retailers, but we do actually like the positive outlook on this stock. We do think it trades at a fairly attractive price to earnings multiple. It offers a very good dividend of about 5.5%, and we do expect their sales will start to improve. They are planning to invest that $40 million into reshaping their food and grocery segment. So we do certainly think this transformation program is positive and underway.